Let's be honest, opening the indicators menu on TradingView feels like trying to drink from a fire hose, right? There are thousands of them, but the real secret isn't finding one perfect indicator. It's finding two that work together in perfect harmony, that give you a clear, repeatable, and logical strategy. Most traders spend months, even years, randomly combining indicators, tweaking settings, and getting stuck in a cycle of confusion. It's exhausting. So today, I'm going to save you all that time and frustration. I'm going to show you a powerful two-indicator strategy using free tools on TradingView. I'll give you the exact settings, step-by-step rules, and a clear checklist so you can start spotting high-probability setups immediately. Just a quick reminder, this video is for educational purposes only. I'm not promising profits, and all trading carries inherent risk. Ready to simplify your charts? Let's get started. The foundation of our strategy is an indicator called the VWAP Price Channel. This tool gives our chart structure, showing us the trend and key supply and demand zones visually. Let's add it. Go to the Indicators tab at the top of TradingView. Type in VWAP Price Channel and click on it to add it to your chart. Now, why this one? Think of it like a smarter, cleaner version of a Donchian channel. Instead of lagging, it anchors itself to the volume-weighted average price, VWAP, at major swing highs and lows. This means you're seeing levels based on actual buying and selling pressure. Here's how to read it at a glance. When the market is trending up, you'll see a green band forming below the price. When the market is trending down, a red band will form above the price. To optimize this for our strategy, we need one small tweak. Open the indicator settings, go to the Inputs tab and change the length from the default to 27. This small change makes the bands more responsive and perfectly syncs it with our second indicator. Now, how do we filter out the market noise and confirm our entries? That's where our second indicator comes in, the Super Smoother MA Oscillator. This will be our trend and momentum filter. Let's add it. Go back to Indicators and type in Super Smoother MA Oscillator. Click it to add it to your chart. I know, it looks complicated with all the lines and histograms, but don't worry. We're going to simplify it and only focus on what matters. Open the settings and let's get this dialed in. In the Inputs tab, change the fast MA length from 20 to 50. Change the slow MA length from 50 to 100. This smooths out the trend, preventing fakeouts. Next, set the ATR, average true range length, to 27, the exact same as our VWAP channel. This is key to syncing them up. Now go to the Style tab. Change the histogram to columns and make them a bit thicker. We want to see momentum shifts clearly. Finally, uncheck the buy and sell arrows. We're not using auto signals. Our brain is the final indicator. Click OK and your setup is complete. Okay, we have our tools. Here's how we use them together to make smart, data-driven decisions. We have a simple, two-step confirmation process. Here's how to read the oscillator. Green area plus green histogram. This signals a strong, bullish trend with powerful momentum. This is exactly what we want for a buy setup. Red area plus red histogram. This signals a strong, bearish trend with powerful momentum. This is our signal for a potential sell setup. Any other combination, like green area / red histogram, means momentum is weak or conflicting. In those cases, we stay out. We only trade when both are aligned. Checklist for a buy. Trade. Price must be trending above the green VWAP band, showing a clear uptrend. Look down at the oscillator. The area must be green, and the histogram bars must also be green. Entry. Enter on the close of the first bullish candle after all conditions are met. Stop loss. Place your stop loss just below the green VWAP band. It's your safety net. Take profit. Aim for a minimum 1 to 2 risk-to-reward ratio. If you risk $50, you should be targeting a $100 profit. Checklist for a sell trade. Price must be trending below the red VWAP band, confirming a downtrend. Look down at the oscillator. The area must be red, and the histogram bars must also be red. Entry. Enter on the close of the first bearish candle once both conditions are confirmed. Stop loss. Place your stop loss just above the red VWAP band. Take profit. Same as before. Target a minimum 1 to 2 risk-to-reward ratio. Let's put this to the test on a Bitcoin 15-minute chart. Okay, look here. Price is clearly in an uptrend, riding above our green VWAP band. That's check 1. Now, we look down at our Super Smoother Oscillator. The area is green, and the histogram bars have just flipped to green, confirming strong bullish momentum. That's check 2. We have a valid setup. We enter the trade, set our stop loss right below the VWAP band, and set our take profit for a 1-2 risk to reward. And as you can see, the momentum carries it right up to our target, a clean, structured, and easy to follow trade. It's that simple. You wait for your rules, and you execute. And that's how you can combine the VWAP Price Channel with the Super Smoother MA Oscillator to create a robust trading strategy. No more guessing, just a clear visual system system to follow. So, what do you think? Are you going to give this setup a try? Let me know in the comments down below. If this walkthrough helped you, please hit that like button and subscribe to the channel for more simple and effective trading strategies. Your support means the world. Thanks for watching, and I'll see you in the next one.